Hi everyone, welcome back. Hope you guys are having a great day. So this is a clip from a previously recorded video. This is a much shorter clip of it. But as always, not financial advice, for entertainment only. Do your own research. And I'm invested in closing companies. And if you enjoy this type of content, hit the like button, subscribe, helps me out tremendously. And let's get into the clip. Next, let's take a look at, we have CORZQ. So CORZQ provided their numbers for fiscal year 2022. I copied all the numbers over into my spreadsheet. We'll take a look at what that all entails. Obviously, they are in bankruptcy right now, so they are very, very risky. If anybody's invested in them, you want to be careful not to invest more than what you're willing to lose with them, because it is very high risk, but very high reward potentially as well there. So I wouldn't invest any more than I'm willing to lose on them, okay? That's kind of what I'm trying to say here, and always do your own research on these guys. All right, so let's take the numbers that I do have for them as far as how things stack up now. So we do have all the numbers here before. We only had the 3 quarters prior to that. We can kind of take a look at it here, just an overview really quick, and then we'll get into the actual numbers here. So last 4 quarters revenue, they were down to 74.4 million. This is just on their self-mining. Yes, this is on their self-mining, I believe, self-mining. And that's down from the Q3 here, which is expected because Bitcoin price went down in Q4 to about 15,500 before it kind of bounced up a little bit here. And then also last 4 quarter operating expenses, at least it stayed relatively the same to where it was in Q3, went down a little bit, but still relatively high for these guys. $115 million is a lot, but they do have a lot of operations going on. Okay, so that's that one there. Cost to mine 1 Bitcoin has come down a little bit here to 28.2 from 30.9. Bitcoin mined quarterly has been growing nicely here ever since Q1, and it's consistently grown up. Debt to equity has become a negative now, 2.9731. We'll take a look at the reason for that, possibly why. And then the current ratio, higher is better, obviously. That has come up a little bit here in Q4 as well. Total current assets has come down to only 85 million from 213. But total current liabilities in Q3 went way up to 1.2, almost 1.3 billion. But that has come down here. They switched it over to another area, which we'll discuss here in a little bit here. Okay, so that's kind of the quick overview of it. Let's take a look at the actual numbers here that we do have for it. We'll get into the metrics here as well that I do on these guys as well. So current assets, cash and cash equivalents was down to 15.8 million from 29. That's not good. Restricted cash actually went up to 36 from 8. So that's good. Accounts receivable went down to 234,000 from 2 million. So that's not good. Accounts receivable from related parties will also went down to 23,000 from 895. Deposits on equipment is basically zero there from 97 million. So that got all paid out. It looks like digital assets was only 724,000 from 19 million. And then prepaid expenses and other current assets was down to 31.8 from 55. So total current assets overall went down to 85 million from 213 million. That's always a concern there. But we've seen that with other miners as well because Bitcoin price has been coming down. So that has had a huge impact on it as well. And then when we look at property, plant, and equipment, that's only 691,000 or 691 million compared to 1.1 billion that they had in Q3. Operating lease right of use, that's a new one there that got added in at 20 million, 20.4 million. Goodwill, nothing at the end here. Intangible assets was up a little bit here to 1.7 from 1.4. And then other concurrent assets was down to 9.3 from 32.6. So overall, total assets is down to 807 million from 1.4 billion. Okay, liabilities here. Accounts payable went up to 53.6 million from 43 million, and that has been coming up here, so that's not always good. Accrued expenses and other is down at least 17.9 million from 102 million. Deferred, let me see what else we have here. Operating lease liabilities current portion, that's 769,000, so that's a new one there. Deferred revenue went down to 76.689 from 80.2. Deferred revenue from related parties was down to 496,000 from 6.9 million. Derivative warrant liabilities is down to 0. Finance lease liabilities current portion is down to 0. Notes payable current portion is down to 36.2 million. And you can see here, this is where they had the notes payable current portion was 977 million. That got them total current liabilities in Q3 was 1.2, almost 1.3 billion, where it's only now 186 million currently in Q4. So that was a good decrease there. But that got moved over to the liabilities here. So you can see here from here, looks like it went down to here. So liabilities subject to compromise. Not sure what that means. If anybody knows what that means, compromise, I wonder if that's part of the bankruptcy proceedings things. That's at 1.02 billion right now. So that's the new one that was added in here. Finance lease liabilities is down to 0. Notes payable is 0 as well. Other non-current liabilities is down to 2.2 million from 41. So that's good there. So total liabilities only went down to 1.2 billion from 1.3 billion that we had. So it looks like they paid down possibly about maybe 100 and some million or so. Then we got shareholder equity here. Stockholder equity, total liabilities and stockholder equity is at 807, down from 1.4. And we actually have a negative here of 409 million for total stockholder equity compared to 73 million in Q3. So that's not good there. Revenues. So when we look at revenues here, so hosting revenue for customers was 35,827 million. So that was actually up a little bit here from Q1. Hosting revenue from related parties was down to 6.795 from 9.18. Equipment sales was down to 0. Equipment sales to related parties was down to 4.1 million from 29 million. And then digital asset mining revenue, this is their own digital asset mining, was down from 80.4 million to 74.4 million. So down 6 million on that one. Total revenue came in at 121 million for Q4, 162 million from Q3. So that's definitely down. That's not good there. And then profit, margin, sales, we won't get into that. Cost of revenue. So if we look at it here, cost of hosting services was still way up there, 49.867 million. They only generated 35. That's a losing business there for them. That's why I hate hosting so much. Maybe I can increase this for you guys as well, so you guys can see it a little bit better. But this is why I hate hosting. Hosting is just like a money pit for not only for them, but also for like Riot. They're losing money on it, and it's not. I don't think it's a great business for that. And then we look at let's see here, cost of equipment sales. So that was at least, let me see, equipment sales. That was 0. That was definitely not good there. They lost basically 3 million on that. Cost of digital asset mining was 115 million. They generated only 74 million, right? That's why they're in the trouble that they are in, because they're just negative on all this stuff. So total cost of revenue was 168 million. They only brought in 121 million. They're basically 47 million shy or short for making up what their costs are right there. So that's never good. Okay, gross profit, it was negative 47 million. Let's see here. What else do we have here? Gain loss from sales of digital assets. That was 19 million. So they actually had some profits from that compared to 11. So that's good. Impairment of digital assets was down 19. So that kind of did the reverse of it. Let's see what else we have here. Impairment of property, plant, and equipment. That was 531 million compared to only 59 million. So that's a big loss there. Loss on exchanges was only 14.9 million. Didn't have one in Q3. Other expenses. So research and development was 2.657 million on that compared to 6.1. So that's actually good that came down. I still think they're spending way too much money on research and development for a quarter. Being a Bitcoin miner, you're either going to be mining whether you're using air to move it through, or you're going to be using immersion cooling or something like that. There shouldn't be spending 2.6 million in research and development. At least I don't think so. Sales and marketing also went way up here to 1 million from 39,000, it looks like, in Q3. Why? What do you say? Sales and marketing. You're a Bitcoin miner. You shouldn't have any sales and marketing. Your best marketing is your operations, your growth, your hash rate, what your capacity is, and things like that. That's your best marketing right there. General and administrative also came down a little bit to 38.9 million from 43.3. So that's good there, but still not low enough, I don't think, for where they are right now, where it should be. It should definitely come down even more. Okay, so operating loss income was negative 636 million. The total operating expenses was 42 million here. So definitely a large chunk of it, basically a third of what they brought in, just on that alone. Let's see. Loss of debt extinguishment was 287,000. Interest expenses was 22 million. That's a lot. Fair value adjustment was 0. Fair value adjustment on derivative warrant liabilities was 4.9 million negative from 521,000. And reorganization items net was negative 197 million 405. That's part of their restructuring and bankruptcy that they're going through right now. So total non-operating income expenses was negative 179 million. Total non-operating income expenses net was negative 434 million. That is pretty close to where they were. Even, well, it looks like it's a little bit higher here than in Q3, just by several $100,000, looks like. Okay, so that's not good. Had a loss of about $6.30 for the year. $1.60 I'm calculating for the Q4 quarter, which is a little bit better than the loss they had in Q3. But nonetheless, it's still a loss. Okay, so those are all the numbers there. Let's take a look at some of the metrics that we do have on this. We'll take a look at it here. For Q4, they mined approximately 4,086 Bitcoin. Starting hash rate was about 13 exahash. They got to 15.7 exahash. Average was about 14.3. So they are massive when it comes to mining, but man, they just can't balance a checkbook, it seems like. And then you got BTC mined per average was 284. So that's coming down, but network hash rate has been going up, so that's understandable. Custom mine 1 BTC was 28,268, and that's minus depreciation, and that's actually down from the 30,000. So they still have a lot of work to do where they can get that down lower to closer to like $13,000, $14,000. And a lot of it is just overhead and salaries and everything else. Debt to equity, like I said, is negative 2.973, and that is based on this numbers here. So total liabilities, 1.2 billion, and then total stockholder equity was negative, came in at negative actually on that one. That's the reason why it's coming in that way. Okay, and that's the accumulated deficit here of 2.173 billion. That's contributing to that quite a lot. Okay, so that's why that one's coming up funky. Current ratio, 0.456, so that is an improvement over Q3 nonetheless. Book to value is negative 409. Price to book value, negative 0.328. Enterprise value, market cap less debt minus cash is 135 million. And then a beta, well, that's negative 434 million as it is. So revenue, 121 million. General and administrative compensation was 38.9 million. That's 32.08%. That still increased here from Q3, which Q2 was really bad. But I thought they were starting to get on a path where they're going to do better. But Q3 at 26.6, now they're at 32. For the year, they're at 33.3. They got to get this number down one way or another if they're going to restructure properly and get themselves on a good footing going forward. They got to, do right by shareholders. At least I would think they would do right by shareholders, but that's just me talking there. So overall, really interested to see what Q1 is going to look like for them, how they've been able to go after the restructuring and the bankruptcy after that was filed in December, and see what kind of changes have happened to there. They did provide some numbers there. I got to look through them for January, February, and March, their balance sheets and things like that. I got to look through that, see if we can make some sense out of that to put it all into here potentially. Okay, unless they're actually going to provide the Q1 numbers, which would be really good at that point. Okay, so like I said, this one is very high risk, also potentially very high reward. Don't put in any more than you're willing to lose on this one. And I'll leave it at that. Do your own research as always. Okay.